Greetings and welcome to this amazing event, Action on Disaster Relief. I'd like to thank GRV Global for this opportunity to present. My name is Adam Bornstein, and I head up the Innovative Finance and Systems Change team for the Danish Red Cross. Our team's goal is to modernize humanitarian assistance with end-to-end solutions that catalyze systemic change and promote agency within the communities we serve. Today, I'm going to share with you our experience in sponsoring the world's first Volcano Catastrophe Bond. Our team operates on the premise that our environment is made up of multiple complex systems. For example, natural systems, design systems, social systems, and so forth. If we want to influence change in complex environments, we need to remain both flexible and anchored in humanitarian principles. Along the way, we've learned a few lessons that help us frame our work. The first lesson is that finance is a tool. It's just a wrapper at best. Number two, being solution and paradigm agnostic allows us to see the systems within the systems clearly. And number three, identifying leverage points within a system allows for small shifts that can produce big change. And finally, reacting to the information from feedback loops help us identify innovations and to find where adaptations may lie. So over the past 3 years, we've used these lessons to structure a new solution and new products. For example, community inclusion currencies, a blockchain-based solution that focuses on recovery and resilience. And we've developed this with grassroots economics, Kenya Red Cross, and Norwegian Red Cross. Another example is the Volcano Cap Bond, which is why we're here today to discuss the details of it. So in general, our cap bond, or a volcano cap bond, works like this. If an eruption happens in any of the 10 volcanoes that are in our project, and the ash column height and the wind direction satisfy our trigger requirements, then funding flows from a collateralized account that is based in the UK and is channeled directly to communities at risk on the ground. So eruption happens, plume height is launched, wind direction is favorable, ash falls on a community, cash is released immediately within 24 hours. We have a few partners that have helped us develop this, and I just want to quickly acknowledge them. Mythica Solutions developed the risk model. Replexus structured the bond and developed the ILS blockchain. Howden Group from the UK provided financial support. Aon does our back office work, and the financial regulators in Guernsey, UK approved the structure. It was definitely a group effort. As noted above, the cap bond covers volcanoes in 10 locations worldwide. Those are identified by the red triangles on the map. So looking at Asia, Latin America, Central America, and Africa. For example, we're in Mount Cameroon, which is very close to Congo, where they recently had an eruption and many refugees were evacuated to Rwanda. We were very close to deciding on going with Congo, but decided for Mount Cameroon. So these locations were selected based on how active the volcanoes are, the proximity to densely populated communities and UNESCO heritage sites, and the Red Cross priority countries. So let's look at the structure of the solution. Well, our journey began in 2018 when the Danish Red Cross decided that we wanted to sponsor a cap bond. We organized a meeting in Zurich, invited a group called Replexus, Mythica Solutions, and a bunch of institutional investors. And over the next 2.5 years, the following structure developed. So in the center, you'll see Danish Red Cross as the sponsor. Replexus, which is in yellow, is the manager of the process. They help structure. And they also helped organize Do Not Re. That blue structure there, Do Not Re, is our reinsurance company. And together, that's where we issued the insurance product. Investors, institutional investors, indicate that they're interested in the cap bond. They transfer money to the Do Not Re. And as a result, Replexus will then push a cap bond, will issue a cap bond through Do Not Re across a blockchain and then into the hands of the investors who can then buy and sell the cap bond as they see fit. So before issuing the cap bond, we had two challenges to overcome. The first was that we wanted to be sure that in the event of a significant eruption, funding would flow to those in need. And two, the problem with ensuring that the cap bond triggered meant that the probability of an eruption had to be very high. However, the higher the probability of the eruption, the more expensive. So to solve this problem, Mitiga designed two triggers and weighed them differently. So trigger one is the height of the ash plume, and this had a 65% weighting. And the second trigger was the direction of the wind, which had a 35% weighting. What this means is that if there's an eruption that directly impacts communities, for example, ash will fall on a village, a good amount of the money would be released from the cap bond. However, if the eruption didn't impact the communities, for example, ash floated out to sea, less money would get released. Now, let me show you an example of this relationship. So let's look at an eruption in Mexico, a volcano called Mount Popo. And let's assume an eruption happened and the plume height was 23 kilometers high and the direction of the wind was north. Well, in our model, we assumed that at 23 kilometer plume height, that 100% of the payout, 100% of the money would be paid out. And also the model assumed that if the wind came from the northern direction, then only 50% of the money would be paid out. And once you blend these numbers together into the equation, instead of 100% of the money being paid, because one, the ash height may be high enough, but the wind might be blowing in a different direction, only 67% of the money is actually released from the cap bond. So the impact of these two triggers on the pricing of the cap bond can be further explained by looking at these probabilities. So typically, a cap bond is priced on expected loss. Expected loss is this ratio that says an investor could lose all their money if X happens, right? So in this case, there's a 2% chance that investors will lose all their money. However, if the expected loss is too low, that means the cap bond won't trigger. So what we did, with some help from this hybrid model, this hybrid trigger, wind plus plume height, we increased something called the attachment risk. Now, the attachment risk is the probability that an investor will lose some of their money. So in this case, that attachment risk is 15%. That means that any time during the year, there's a 15% chance that the investor is going to lose a little bit of money. So the end result is that the cap bond is priced at 2%, but carries a 15% probability of being triggered. And so this is an example of identifying leverage points in a system to invoke big systemic change, which is one of the lessons that our team has learned over the past several years. A question we get asked a lot is why we developed this product. There are multiple reasons, but one of the main reasons was that insurance has the ability to lower the cost of humanitarian assistance while increasing its effectiveness. However, it can be very expensive to buy an insurance cover. So we needed to find a way to make insurance affordable. When we break down what insurance is, it's data, testing and modeling assumptions, and legal wording. It's a value chain of fees, and at each point, the buyer loses more control over the process and the product. And so if we wanted to change the paradigm around humanitarian financing, we had to lower the barriers to entry. And to do this, the Red Cross had to become a reinsurance company and control the process. Another question we get asked quite a bit is why go through the hassle of issuing a cap bond when maybe we could have bought a plain vanilla insurance product, which is so much easier? Well, there are 5 reasons that we went through this process of issuing a cap bond. The first one is structure. The proceeds from the cap bond sit in a collateralized bank account. We know for sure the proceeds will pay out for a specific risk event as long as the triggers are satisfied. It's absolute. The money is there. We can see it. It's transparent. Also, the cap bond is listed on an exchange that is regulated. It's a registered exchange in the UK. This creates liquidity and secondary opportunities, which attract institutional investors who would not otherwise consider funding a humanitarian project. For example, Plenum, an ESG fund, or Schroders, an ILS investor. And finally, as the insurance company, we can reissue multiple cap bonds through a single vehicle. In other words, do not re can be used multiple times. Another reason is funding. In 2021, humanitarian organizations are facing a $30 to $50 billion funding gap, and this gap is continuing to grow exponentially. Humanitarian organizations are at a massive disadvantage over traditional development and financial institutions because, for one, we don't engage in fractional banking. We can't print money the way banks do. We can't issue debt the way the World Bank does. So we have to find other ways to leverage our donor financing. By engaging in the capital markets, by issuing a cap bond, we can actually do that. And for once, we can actually be at the center of that capital markets flow. Another reason for this is risk transfer. Humanitarian organizations shoulder quite a bit of uncovered risk: financial, operational, reputational, and societal. These risks need hedging. So to the extent that we can transfer risk to third parties, especially private investors, on a fair, risk-adjusted basis, we absolutely should. And then finally, around innovative procurement. Humanitarian aid is driven by small, short-term grants that make long-term localized impact very hard to achieve. In 2016, signatories signed the Grand Bargain and agreed that 25% of all humanitarian funding must go directly to local organizations by 2020. As of 2020, only 2.1% of funding went directly to local organizations, which is down from 3.5% in 2016. A collateralized cap bond structured as we have done it on a blockchain can help ensure funds are transferred quickly in an unencumbered way and directly to those who need it most during a disaster. So let's talk a little bit about the future. The technology and the structure supporting the Volcano Cap Bond has lowered the entry points for the Red Cross so that now we can actually sponsor other cap bonds and blended insurance products. So here's a couple examples we're looking at right now. One is a nature-based risk reduction trust fund and ILS that looks at mangroves. Mangroves are quite prevalent in Africa as well as Asia. And so we can blend these two structures where we're looking at nature-based repair and maintenance with a cap bond that has ILS and that has an insurance cover. It's actually a quite neat package and a great way to have a blended finance. Another is looking at refugee health insurance facility in Africa between Kenya and Somalia. How can we actually use cap bonds and ILS and parametric triggers to ensure refugees on the move, individuals on the move, so that we can cover their healthcare? That itself would have a massive impact that could be replicated across the continent and all across the world. So while cap bonds are not perfect in every situation, there's still a lot of work for us to do to lower the barriers to entry. This project creates space and it set a precedent for other humanitarian organizations to reimagine what humanitarian funding can be. Thank you very much for your time.